Borak Bersama Maybank. It is once again post-earnings season and we're here with Sue Lin to thankfully wrap up a decent second quarter. With that said, welcome aboard, Sue Lin.
Welcome, thank you.
Alright, so I took a look into the report and I'm quite happy to say that after a couple of tumultuous quarters of downgrades, we are finally able to see some semblance of stabilization in the markets. Long story short, there are a lot more hits in terms of earnings estimates and a lot less of negative downgrades. But enough from me, could you guide us through what are some of the key highlights you see from the quarter?
Thanks. So the last time I came on board here to talk about earnings, I think it was pretty uninspiring the first quarter. The good news is we're now looking at a much happier view this time around. Of the more than 100 stocks that we cover, we saw more than 60% of them meeting expectations, while 14% of them surprised on the upside. However, there were no clear sector winners this quarter, although it was quite comforting to see that most large cap stocks meeting expectations. But there's one thing to highlight. If we were to look at the ratio of core earnings misses to beats, it has risen a little, but it's not because of anything disastrous. But while the number of misses declined, the number of beats have also declined. That said, overall, we are very pleased with the second quarter set of numbers, and it is showing some semblance of stabilization.
Alright, Sue Lin, as at time of recording, the FBM KLCI is currently hovering around 3% higher than the start of the quarter. Would you say this round of company results has helped to support the local market's recent performance? And are there any tweaks to our earnings expectations and KLCI target moving forward as well?
Okay, so if you were to break down by market cap, and by component stocks. So the KLCI component stocks largely met expectations. About 80% of the KLCI component stocks met expectations, and this compared to only 53% in the first quarter. In our view, we think this probably helped support the FBM KLCI of late, and this is basically seen to be a lot more of a positive semblance going forward, tempering any fears of under-delivery. But we also take into account that while we have seen some tariff de-escalation fears, as well as the favorable outcome of our tariff negotiations with the US, that too has added a bit more interest into the market. Now, that aside, we did see a lot of standouts in the second quarter among the small mid caps, and among the ones that we cover under the 1 billion ringgit market cap, CP Tech, Northeast, MN Holdings, and Wellchip well beat expectations, supporting the outperformance of the FBM small cap index. If we were to look at the earnings growth tweaks, looking at the KLCI growth itself, there was a bit of a tweak because of a change in component stocks between HLFG, excluded, AMMB included. But that said, we've also upgraded stocks like banks, especially CIMB and RHB, consumer stocks like Nestle, and plantations like ST Guthrie. However, this was offset by telco stocks like Axiata. So net, while we were looking at 2.5% KLCI growth in the last quarter, we're looking now at only 1.5%. That said, if you put everything into place, our KLCI target is unchanged at 1660. That's pegged to 15 times 2026 earnings KLCI.
Alright, so then before we wrap this up, I think there has been some movement in terms of stock prices as well, in which case some of them have actually rallied a fair bit to hover around our estimated target prices. Has this moved the needle on our top buys list?
So we have kind of rejigged our top picks. Most of our top picks did very well up to the results season. So what we've changed this time around is we've added Hong Leong Bank. While we still have buys on Public Bank and AMMB, we do think Hong Leong Bank now offers a bit more interest because of a higher dividend payout. At the same time, we would look at the loan growth and asset quality, they fare better than the other two. We've also added IHH in the healthcare space in addition to KPJ, which we still like. In the case of IHH, we see positive momentum building up in Malaysia, while Singapore should be back to full strength next year. In the consumer space, which is a very important sector that will drive consumption spending in Malaysia for this year as well as going to next year, we've added EcoShop, replacing Aeon. Besides that, we still like Farm Fresh. Typically, we don't usually see any plantation stocks in the top picks list, but this time around, we're going to go against convention and add ST Guthrie. ST Guthrie should no longer be just seen as a pure CPO play. We are optimistic on its new business verticals, using its land maximization as well as renewable energy, though still small. It is something to kind of look out for beyond just plantations. Tactically, we like Westports. This is underpinned by defensive earnings profile. At the same time, in the second half of this year, it should benefit from the recent tariff hikes as well as a robust transshipment recovery. We are also adding MN Holdings to see continued data center jobs. And we've seen its financials doing very well in the recent financial year close. We do think that we will still continue to see strong news flow of job wins going ahead. Last but not least, we are adding Northeast Group, and this is poised to benefit from the strong demand from the E&E side and photonics. Within the tech space, apart from Northeast, we still like Franken. While we have removed ITMax and ATech, they remain buys in our list.
Alright, thanks again, Sue Lin. As a side note, the stocks mentioned by Sue Lin earlier will be replacing our previous top buys, which include Public Bank, Mbank, Aeon, ITMax, Aurelius Tech, and YTL Power. And that's a wrap for today. Aside to the audience, you can catch our latest reports on your Maybank Trade MY app. All you need to do is just head over to the Insights tab and you'll be able to find it there. And as for those who are looking to trade stocks, structured warrants, or futures, you can apply for a CDS or trading account online via the QR code on screen now. But if you need a more personal touch, you can also approach our sales representatives and they can get you sorted on the trading account as well. With that, we'll catch everyone in the next episode, but until then, this is Ben signing off.